surging cost of carbon compliance is already rippling through supply chains. It will drive up freight rates, it will influence fuel choices, and potentially it is going to reshape global trade patterns and upend established business models. This is about winners and it's about losers. And it was with that thought in mind that I recently engaged in what I thought was a very timely and interesting discussion during North Shipping, where we examined exactly who are going to be the winners and the losers of carbon compliance and trading. And I'm bringing you the edited highlights of the discussion here in audio form today because, well, I thought it was a very interesting discussion and it deserves a wider audience. What you're going to be listening to is taken from a live event organised by our friends at Siglar Carbon in association with the London Stock Exchange Group and us here at Lloyd Intelligence. In addition to me moderating the discussion, you're going to hear from Lars Pedersen, the CTO of Frontline and the Managing Director of Flex LNG Fleet Management, Paula van Lanningham, Director of Carbon Research at LSEG, Russell Fernandez, Emissions Manager at ST Shipping, Glencore, and Sigmund Kivik, Chief Executive of Siglar Carbon. And the discussion was about the majority of shipping that sits in the squeeze middle. That's the bit that is unable, unwilling, or unsure of how to progress amid overwhelming complexity. How does your average shipping operation move beyond compliance to seize the carbon opportunity, improve efficiency, and take a commercial advantage over their peers? Who are the winners and losers of this immediate future where regulatory reporting is already upon us, but so many companies are yet to deploy a convincing strategy? Well, that's the question that we started with. Who are the winners and losers here? And I started inevitably with Sigmund, Siglar's CEO, who, for those of you who don't know him yet, and I would urge you to get to know him because he's a very useful man to know, he comes at this question from the background of a 20-year career in commodities trading.
This is quite simple. It's a new financial exposure that drives into the value chain. To understand that exposure and to risk manage it, that's what it's all about. And then we have the traditional kind of head-to-head between charters and owners, etc. This is a value chain issue. And talking about winners and losers, I would say that these massive costs that we know will hit the industry will be distributed down the line. And I guess the losers will be the ones that don't understand that and don't have the insight to handle it.
We will come back to some of that, but I'm going to come to each of you with that question. Lars, let's go to you. You are clearly one of the winners, I would assume. But, I mean, how do you see this panning out? Who are the winners and losers here?
I can add up that I have been in shipping for 30 years, and it is not new to ship owning or the commodity in shipping to be exposed to change. Shipping is extremely dynamic, and quality owners have always had focus on consume or emit emissions as less as possible, because it has a direct impact on our cost. But what has changed over the last couple of years with the different taxes and more taxes to come is that if you don't have control of your data and have enough data available, you are not able to take good enough decisions, or you're not able to see the trades and the different trends in the industry. So the winners will be, in my opinion, those who have grounds for taking best decisions, but certainly also have the capacity to invest in technology.
Absolutely. And we'll come back to some of those questions around scale in a second. But Russell, coming over to you, I think the importance of having you on the panel is that we need this overview of the industry, and sitting where you do, you see how some people are reacting and possibly some who aren't. Who do you think are going to be the winners and losers here?
So I'm Russell Fernandez. I'm the emissions manager for ST Shipping in Glencore. And to come to the point of winners, I think the participants who are paying close attention to the formative changes in the carbon structure pricing, definitely that's, examples of the tightening of balances into 2030, participants who are reading the policy decisions and policy changes that are happening. Example, the aligning of the UK and the European ETS schemes, the upcoming Turkish ETS scheme, the upcoming possibly China ETS schemes. I think this is quite important. Understanding the complexity of the regulations, the Fuel EU regulation is very complex. The IMO GFI is even more complex in my opinion. That's really important. That's one aspect of it. The second aspect of it is, to Lars's point, is the standardization of data. The regulations have made the transparency of data quite important, but having an overview of your data so that you can have a complete risk profile and exposure is very, very important. In going into that, then you can plan your short-term, medium, and long-term strategy, and it's really important to have those three strategies from where I sit, not just from our perspective, but also from an owner's perspective. And, you know, we talk about bigger players and smaller players. I think the key thing out here for me, and I'll probably repeat it throughout this thing, is collaboration. It doesn't matter if you're big or small. If you can collaborate, and it's learning through other people and other partners, that you can come out a winner, I think.
I love the fact that these guys think they can sort of forecast 10 years into the future. I wake up in the morning not knowing what's happened overnight and barely understanding what's going to happen tomorrow, but that's why they are in these seats. Paula, let's come to you on the winners and losers thing. I've deliberately left you last because these guys have predictably, diplomatically, given us a view of the winners. But I'm quite keen to talk about the losers as well, and I think you might have some insight here.
Yeah, I think kind of pulling on sort of the idea of what will matter as you sort of see these layers of different types of regulation take effect on different timescales, which adds to the complexity of the issue, is that if you do not get ahead of it in advance, it will come and bite you quite dramatically as it sort of comes down the line. And so that sort of preparatory work is really critical. The costs of carbon are set to skyrocket quite significantly over the course of the next couple of decades. That's deliberate, of course. Carbon is a policy instrument, so it works by gradually tightening the screws. That's how you push decarbonization. And so as that kind of pushes forward, that's going to continue to be, I think, an escalating cost that really goes beyond, Gear's graph showed effectively how far it goes out until 2030, but it's something that's going to continue to be an issue going out to 2040 and out to 2050 as well, particularly when you look at some of the different types of regulation. There's a real escalation in terms of carbon intensity changes and sort of what people expect, like what the regulation expects different ship owners to do going out further into the future, and it really escalates. It starts out quite shallow and it gets quite significant going forward, and so not being on top of that in advance is really dangerous. And of course, that's one of those things that works better at scale in some cases, but really it's about being aware of those things going forward. And that's a bit of a rehash of what everybody else said, but that's the problem with going last in a panel. So.
When we're writing headlines, people ask, what do we choose? And I give them the spiel that, we write about opportunities and threats. The reality is it's mainly threats. Nobody is going to be particularly interested in the opportunity headline saying nice things will happen. Scaring the bejesus out of the industry is our bread and butter. It's about understanding the risks and the things that are coming down the line. And I think, to your point, Paula, there are penalties ahead of us. And I guess the underlying question here is, are we ready? Is the industry ready? Are we in the winners or losers camp? You gave me a frightening statistic earlier. To scare our audience for us, how many people have actually submitted the basic compliance regulatory framework stuff that they need to?
So this was, so the first filing deadline under the EU ETS for the emissions calculated in 2024 was in April, and only 40% of the relevant shipping industry actually filed within the deadline to do that. I will caveat that, which is that the actual surrender deadline is not until later this year, so you would expect that number to narrow. But what is very clear is that the industry itself is already not quite fully on top of the regulatory requirements for the EU ETS, and you add in some of these other issues going forward, it could be quite a big problem. There are significant penalties for late surrendering in the EU ETS. The actual cost per metric ton of carbon dioxide equivalent is more significant than the actual cost of the allowance right now. It's a €100 per ton penalty. The cost of carbon today was about €72 per ton. And as you get closer and closer to that compliance deadline, it's quite difficult to make up for the gap in some cases, just because the market itself is thin. This isn't dated Brent, ICE Brent. It's a much thinner market, and so you can kind of run into these challenges a little bit when you're trying to kind of source something on a short deadline. And so that could potentially be an issue going forward as well. And it's important to note too that this is the first year, and only 40% of shipping emissions are covered. But obviously that escalates going forward to 70%, and then of course 100. And it's only covering CO2 right now, and it's supposed to be covering methane and NOx going forward too. So it's definitely, I think, probably a slow start. But we'll see how much that picks up when we actually see what gets surrendered later on this year.
Well, I'm not seeing too many faces drop. I was expecting some people to get their phones out and start sort of having a look as to whether they might fall into that category, but I think we've got the good ones here.
I think to some extent, as we've sort of said before, it's, as we were talking about before, is that, you know, for players who've been exposed to the EU ETS, it's perhaps not as alarming, but a large number of players are relatively new to this in shipping, and that's where you're going to see that challenge.
Could I ask we get the other slides up briefly? I took the liberty of asking the industry a few questions on your behalf in advance of coming here today. Has the outcome of MEPC 83 given the industry sufficient clarity to accelerate decarbonisation investments? Well, no, it would appear not. Let's talk after October was the most answered multiple choice. I was a little bit cheeky there, but we are still waiting for clarity is the point here. If we just go on to the next one, is the average shipping company looking at emissions reporting as a compliance cost or a commercial opportunity? It's a cost. It's not an opportunity. Scaring the bejesus out of you is also what everybody else is doing as well. Next question, please. Is the average shipping company equipped with the sufficient technical expertise to navigate regulatory compliance over the next 5 years? No, you're not. No, according to everybody else, no, we're not ready. And then I asked whether anybody would consider the best investment opportunity for the shipping industry in 2025 to be efficiency retrofits. Yes, some. Digital optimization systems. Yes. Emissions data management and trading. That'll cheer you up, Sigmund. Dual fuel new buildings, second-hand tonnage. Not so much. The numbers are indicative. I mean, it's not a statistical survey by any chance. This is, you know, people who are bored enough to follow me on LinkedIn that have nothing to do else on the way out here. But, you know, 500 people in the industry turned up and said, we're not ready. Now, that to me confirms at least my anecdotal conversation on a daily basis that suggests that being in shipping is a lot more complex than it ever has been. Even the good ones, the big ones, are struggling with some of the complexity. And as I said at the beginning, we're not talking about Maersk's or Cargill's or Glencore's or Frontline. I'm assuming that Mr. Fredrickson and his cohort have got this nailed down. They have been preparing this for years. But the average shipping company owns 5.5 ships. The massively overworked chief financial officer who is sitting there trying to get his head around the various pieces of complexity coming his way is perhaps not as ready as we might think they are. So I guess the question is, you know, to the point of why are we not ready? How do you view this? Lars, let's start with you, because you are ready. We've spoken about this. You know, you've been preparing for this for years, but you are representing a large company. Is this about scale, do you think?
It's for sure about scale. I mean, these are, as I say, very, very complex questions, operations, costly investment cases to do a transition that we are part of now, taking the right decision. And you need muscles for that. You need to be able to raise finance, competitive finance, but you also have to have a customer base who are willing to take part of this. So if you are just investing, but no one wants to pay for your product, then you are soon out of business. So you have to balance how you do your prioritization in spending your capital. As a large group where we have control of more than 300 ships, we have the muscles to do it. But for an owner, operator, which are maybe 3, 4, and there are many of those, particularly in the Mediterranean, I mean, they struggle. And they struggle on how to get the resources, how to pay for it, who should they collaborate with, and there they have really to think out of the box. Most of these smaller owners are traditionally family-owned business and are used to work very traditional, very quality, but very focused. Now they are exposed to digitalization and access to online data, high frequent, and have controls on how they fix the ships also. Because if you're selling your product, and if you sell the product without understanding that you need to recover your exposure, then you're out of business. And for that, you will need to collaborate with solution providers like Siglar or other solutions to help you capitalize on these things.
Just picking you up on one point, I mean, you mentioned sort of talking to your customers. I'm assuming it's not a singular conversation. Talking to,
no,
we're not going to point fingers, but talking to an energy major, for example, versus somebody in the retail side. I mean, these are very different conversations.
Yeah, it is very different. We are in oil and gas, but we are also in commodity, where we are exposed to retail through transportation of containers on container ships, and those putting their goods into the containers, like, for example, the IKEA or Nike or whatever. They have a view on sustainability, and they are willing also to pay for it. While we see those who are developing hydrocarbons themselves are not in the front seat. Therefore, we also have to balance our investments in the different segments compared to what our customers are looking for. So we have a product that are attractive. So that it's not a straight, easy answer. It is a balance of managing regulation, the relation to your ships and building, or charterers or customers, and building an attractive product. So yeah.
I'm deeply shocked to hear that the energy majors' claims of sustainability and forward-looking decarbonisation might not be as robust as they claim.
But if you take it back to before Russia invaded Ukraine, there was a wave of ESG and hydrocarbons, which were not very, attractive to anyone. It was hard also to attract talent to that business. But when Russia invaded Ukraine, it changed from sustainability to energy security, which is a major thing, and trades had to change. And you can follow the media on some of the big energy majors. They have also changed their strategy on how energy should be developed.
Well, I blame Putin for a lot of things, but global warming as well, it's another tick against him. Russell, let's talk about that scale issue as well, because I think it's important. This complexity argument, I think, is really key to this debate, understanding, how we as an industry deal with this. Are we set up for this complexity?
Yes and no. When I was first brought into to handle emissions and carbon, I hadn't a clue, I'm being honest. And I'm an ex-master mariner, but I think there's a lot of information out there. When we talk about the average ship owner, they have access to class societies. And the class societies, well, the ones I've seen, some of them are doing a really good job of educating owners and educating industry participants. So I think that battle, so to speak, could be fought by education. And I think just like Siglar is doing and a lot of other data providers doing, is bringing to the fore the cost of these emissions. And I think it's only when you understand what that cost has on your bottom line and your employability of your ships in the long run, then it starts to take precedence. Hang on a second, we need to do something. So I think the smaller owners need to understand that, and maybe class societies need to get that message across, not just even the flag states need to do that. And that will come through IMO, through the IMO GFI policy, I think. That's put emissions on the map, not so much as fuel EU, but the IMO GFI has already put it on the map right now, and it's got people talking. One of the stats you had out there, which was interesting, was you're talking about, are we ready or not? No, we're not ready, because the pace of the regulations is outpacing the development of the e-fuels, which is the most important thing in this whole thing. Technology, everything else, we're talking about optimization. If you don't have the e-fuels, you don't have the fuel, we're never going to meet these targets. So where investment is needed, it's in development of fuels, in my opinion. And owners need to be part of that discussion with suppliers.
I don't disagree with you, although I would counter some of that with the fact that the history of shipping is one where we have approached deadlines before with limited, let's just say there's a gap between the rhetoric and the reality of what I see in the industry. Sulfur switchover, we were there the day before and everybody was saying, what, today? Oh, you should have told us. We didn't realize it was coming. We as an industry are not good with deadlines. And I say that as the editor-in-chief of a newspaper, and I look after journalists who couldn't hit a deadline if you put a dartboard in front of them. I mean, I get it. It is difficult. But we are not very good at this. I mean, Sigmund, you must be talking to customers who are coming to you and saying, look, I'm not ready. Can you help?
Mm. Yeah, we see a lot of that because, especially for the small to medium-sized ship owners who doesn't have a system like you, Lars, and their back, they now see this becomes an operational problem for them. Now they actually need to hand them over, so it's a practical problem that needs to be solved and supported. But then turning our face to the charters or the cargo owners, we saw they kind of accept actually the trading houses because they have a tendency to be a bit more forward-leaning than some of the majors. We saw them catching interest a year and a half ago, and then we had a bit of a situation last year where we had a very strong shipping market, 40% scaling of EUA, no fuel EU. So the relative share of kind of the freight rate was so small that it became an all-included kind of discussion, i.e. not the charter problem. This is changing, right? On a VLCC now going North Sea, China, we're talking $5,000–6,000 a day only in emission cost if we gather it together. And Lars knows better than me than what's the OPEX is on a VLCC these days, but it's a massive top-off, right? And we can all have our view on the shipping market, but we do know it's volatile and it will come down again. So this cost, at some point, this becomes so painful that it needs to be pushed down the value chain. Otherwise, it simply doesn't work. And at that point, things will start to click in. But it has a delayed process, absolutely.
For those of you who attended any of the conferences so far, you will no doubt have heard that the buzzword is uncertainty. It's the blanket excuse for not doing anything at the moment. The industry is paralyzed. We cannot see what is in front of us. Therefore, we are going to do nothing. Seems to be the general underlying theme. That said, I had lunch with a prominent private ship owner a few weeks ago, and I walked into his office. I said, how are you? He said, terrible, terrible. The world is on fire. It is awful. I don't know what to do. I said, how's business? He said, oh, it's great. Yeah, it's really good. We as a shipping industry are sort of, simultaneously complaining that we don't have the certainty to act, and yet actually we love uncertainty. We love disruption. We love inefficiency in the market because that's how we make money. This word optionality, which I've heard you use quite a lot, Sigmund, I think the underlying message of what you're saying is that we trade optionality, and that doesn't necessarily lead us to the most efficient carbon decisions. But the natural outcome of what we are discussing here today is that we have to change what we are doing. We have to change the way we are behaving. Do you think that we are going to have to adapt business models because of this?
I think so, absolutely. I think it needs to be more value chain discussion. It's like the classic spot cargo, which is being held off the market until the last minute. Well, that has an effect on carbon, because then good owners cannot position themselves optimal versus a cargo. So let's use the shuttle tanker market in the North Sea as a different example, which is a kind of closed pool of ships optimized around a logistical system where they all are aware of when the cargoes are available. They're highly technically advanced vessels because the charters, or operators as they call themselves, demand those kind of technicalities, but then they also pay it through long-term charters. So it's a very different model, and that especially goes for the tankers and the bulk market in tankers, where the optionality is seen as a part of the trade. Well, an east-west option that has, then you need to understand the carbon consequence and the carbon cost consequence of those decisions. So it kind of as you said, it's like having that transparent discussion, being more open and cooperative in the way we do the business through the value chain, can unlock a lot of decarbonization effects.
Can I get a view from the rest of you on this? You know, do you see things changing in terms of what Sigmar's just said? Do you think your business model in terms of trading is going to have to adapt to this? Russell, let's start with you.
Oh, okay.
Sorry.
Yeah, definitely. I think over the course of the last 2 years, we've adapted ourselves. It has to change. I've seen owners starting to note the effect and the cost on their business itself. For us in the shipping business, in being on the chartering side, it comes down to our contracts with our owners, our clauses with our owners. But I think, as we reiterated before, it's a discussion you need to have with every party in that chain, because there's a lot of potential to be unlocked. As you know, I could cite some examples in the industry that people are just on the compliance balance side in fuel tying up with bio-LNG suppliers or biofuels and unlocking the ability for them to supply you with the compliance balance and getting a reduced price. And so there's all sorts of ways to do this. I think it's just educating yourself, really. It's just talking to people, having those discussions, and without getting bogged down into the details until you have a strategy, and then nailing it.
Lars, just come to you on this quickly, because I mean, you work with a pretty famous guy who's sort of noted for his business acumen in terms of reading the market and how things are going. And I read with interest his latest interview, where he's sort of predictably keeping all options on the table in terms of what he will and won't invest in. But this idea that any ship owner would deliberately run an inefficient vessel is ridiculous, of course. But it's not always that simple, is it? And you've got to make the best financial decisions in front of you. That isn't always the best carbon decision.
No. But okay, it differentiates a little bit in which shipping segment you are in. Some we are on long-term charters where it's more predictable, and then by historical way of trading in Frontline, it has been opportunistic. So basically, majority of the ships are trading in spot, where, like you say correctly, Sigmund, that you don't know where the cargo is going, and the cargo on a oil tanker can change ownership many times. So you can be loading the ship in port X and go and expect to go to port Y, but in the middle, the cargo is sold, and then you go to port Z. That can also happen for time charter ships, but you have to have flexibility enough in your time charter parties. There are means to try to manage the risk by pooling your ship with different kind of other ships that can try to balance your carbon credit, and you can have a means of biofuel. So there's different ways, but your model is for sure challenged when you don't know where the cargo is going.
Let's talk about transparency a little bit. I do want to open the floor to some questions, so start thinking any questions you want to direct to these people. But I wrote a fantastically stupid editorial a couple of years ago where I predicted that shipping was going to become more transparent. And my argument was scale, digitalization, access to finance, and all of these things were pointing towards, being a small company was going to get more and more difficult. And of course, actually, what's happened is the opposite is true. I've seen the rise of the dark fleet. Obscure, opaque brass plate companies are standard, and shipping is disappearing into the shadows once again. However, I'm sticking with this transparency prediction because of what you are discussing here. I think data transparency and the need for predictability is going to overwhelm the worst instincts of the industry. How important is data and transparency, do you think? And am I completely off beam in saying that shipping is going to become more transparent as a result of it? It's a bit of a left field question, but Sigmund.
I think this is not an either or, right? Because there's a nature of business, and there's the business needs to will also always fight against transparency to create those trading opportunities. Then on the other side, the data we're talking about here and now is not necessarily very business sensitive. So it's about boxing the data in together and share the data for that purpose. Does not mean that you need to run an open book and tell everybody what your plans are for the next cargo. So I think we can't put data in one box and say, should we just open the box? It needs to be the right data at the right time shared with the right people. And then a standardization, as you say, Russell. So we all look at the same and actually have, let's call it the common carbon language through the value chain. Otherwise, we don't know what's good and bad. And as Lars example is as well, with kind of that optionality trading, I'm an old trader myself. Of course, I do understand the need for that optionality, but you also need to understand the carbon cost and carbon consequence of that optionality. And sometimes, at least when I look at the ARBs today, some of this ARB will be eaten up by these carbon costs, and maybe that's not an option anymore.
Paula.
I will add that carbon itself can often, or sort of carbon pricing schemes and emissions trading systems are often very good at pushing transparency because they create standardization where there hasn't been before. And so the fact that the EU ETS is sort of leading this on shipping, because the EU has done a lot of that sort of leading on the issue of carbon, but the fact that it's sort of spiraling into other regions as well means that you are going to see, I think, a little bit more of that push towards transparency in different circumstances. There is that sort of history across different ETS systems of standardizing things that people would either try and keep secret or for various reasons, or alternatively would report in different ways, right? One of the great powers of CBAM eventually will be standardizing the way that we do carbon accounting across different commodities, and that's a big change. It's sort of an under-discussed change, but it's a big change because for years people have been doing carbon accounting in different ways. And so when you kind of create a system, an international trading system, like the IMO, where you're actually looking at a lot of this, it becomes more transparent sort of by necessity on some of these areas, simply because everybody's using the same spreadsheet.
I'm going to end with a request. We've noted lots of downside risk, I guess. I started with the question of, can we identify some opportunities and threats to the industry? So I'm going to end on that question and ask you to sort of give me your most optimistic view of where the opportunities and threats lie in this complex, uncertain world ahead of us. Interpret that as you will, but I mean, let's start with you, Sigmund. Where are the biggest opportunities and threats, do you think?
The opportunity side, I think, is again to work on long-term contracts, to facilitate kind of the footprint level that is needed with premium charters. That could be an opportunity. Then on the other side, there's also a footprint by building new ships. So we shouldn't forget about the current fleet and utilizing that as the best possible in a combination of what you had on the screen on retrofits, digital solutions, and not at least there is an investment that I think is kind of under-communicated, and it's also an investment to do a long-term charter on a discounted rate to facilitate maybe a different trade route or a ballast leg or a lower CP speed, which is an investment by giving a discount. But that can also especially help the older ladies on the sea to facilitate. And I think that's, from a sustainability point of view, some of the most important thing we do now is to facilitate that they all sail through the lifetime, and we can't build ship in blind.
if you want to hear his threats, I would suggest you tune into the latest edition of the Lloyd's List podcast, where he's a little bit more negative than he's being now. He's very rosy and optimistic today. Russell, opportunities and threats.
Opportunities, I mean, from a purely commercial angle, ETS schemes. We've seen it spike to 100, and then we've seen it fall to 59, and then there's your opportunity out there if you've got slightly deep pockets. But that's a great opportunity on a commercial front. Similarly with compliance balances, everyone's jumped into the pooling aspect of it. There are platforms, there's price points, but there's opportunities there. If you could talk to people, you'll find, there's real good opportunities. There's people with LNG ships that are long compliance balance, and it's managing partnerships. On a commercial side, then I think even collaboration, as I mentioned before, I think no one's going to win this battle by themselves, so you're going to have to collaborate with other people to try and move past this. The biggest threat for me is, as Seaman just reiterated, I think is with technology and where the regulations are going is, and I don't know the numbers, to be honest, and I don't know if anyone's thinking, what is the percentage of stranded assets we might be left with in the long? And it's not necessarily a bad thing. I mean, maybe, and this is again my personal view, maybe some businesses need to do, our overconsumption is pushing us in the wrong direction. So at some point, something has to give. So, but those are the stranded asset thing. I think is something to consider in the long run as to how we're going to play this out.
Yeah, we could probably see some exits from this industry and not worry too much about the quality, I would suggest.
Fair point.
We will see. Paula, any view on opportunities and threats?
I would argue here as well that it's important to view carbon instruments like the EU ETS or like the IMO decarbonization efforts are a tool, and it may seem kind of sitting from one side that they feel like a really big mallet to kind of force decarbonization in one way or another, but the reality is that they are quite successful in being able to do that, and they have shown quite a good history of success. And the ambitious targets that are set are done, for reasons around kind of actually managing, I think, this sort of issue around overconsumption and sort of adjusting behavior. And if I would argue to some degree, industries that sort of and market participants that kind of approach that with a sense of, okay, we're going to work within this system rather than kind of waiting till the last possible minute to kind of barely comply, tend to do better overall in terms of actually being able to come out on the other side effectively, because it's not really going to go away. 2 years ago, we did an event with Siglar Carbon, and the question that we kept getting, and this was the second half of 2023, so it was like really close to 2024 in reporting, and everybody was like, well, surely the EU is going to push it back. And I was like, that's not how policy works in the EU. Sorry. And so I would say that is still kind of the case, which is, the 90% target hasn't been fully legislated, but it's pretty supported at this point, and there are some political uncertainties, but it's not really how the EU works. It's coming. So it's sort of like you kind of embrace it early, or it hits you really hard with the mallet.
Yeah, the European Commission is not noticed for its laissez-faire attitude towards deadlines, but I mean, just on
or
that,
fines.
Or fine. Well, that was my question. It's like I've heard lots of commentary about the fact there will be leniency because of what is happening. I'm guessing by your face that's not your view.
I think the phrase I used before was that's not really the EU's vibe. It's really not the EU's vibe around this sort of thing. I mean, there are some questions about whether if there is a significant lack of compliance over 2 years, for example, you could be banned from EU shipping waters. I don't know how effective that will be as a threat necessarily, but I do think that the fines are absolutely something that can be enforced and will be.
I'm intrigued to know what the EU's vibe is, but that's another discussion.
Famously vibeless in Brussels, but
okay.
Yeah.
Last word to you. Opportunities and threats.
I think we will continue investing in technology, in new ships. One of our competitive advantages is that we own and operate young vessels with the latest technology, applying our operational experiences and capabilities into those design. that is for sure building our capabilities and capacities for understanding the different fuels. It's not just to go to the gas station and add on ammonia or other exotic fuels. It requires really the competence and building people and training people that can handle those things on board the ships. So the whole safety aspect of it has not been discussed too much here, but it's another major thing apart from compliance, which is impacted by emission reductions. Maintaining our focus, learning our capabilities. Some segments we have already started the transition into dual fuel, monitoring the upstream, downstream availabilities, make business opportunities on securing biofuels like we have already started on, and pooling with friends and peers where it makes sense.
That's where we're going to leave this discussion. I hope there were some useful insights in there for you. Thank you to our friends at Siglar for organising the discussion and inviting us along to moderate. Thanks to Paula and to Lars and Russell, and thank you for listening. We will be back with the regular, shorter edition of the podcast next week. But for now, goodbye.